Rise and grind, trading family. Happy Friday. Session 51 is live. Today's show has one thesis: VIX is lying to you.
Quick disclaimer before we get into it. Nothing we say is financial advice. We are two guys talking markets, not telling you what to buy. Do your own research.
VIX sits at 16.77 right now. Goldman Sachs is putting 25% odds on a recession. Rapidan Energy is calling this a 2008 level recession setup. Oil at $99. Mortgage rates sitting at 6.6% this week, the highest we've seen since last August, and homebuyers are getting crushed. The Philly Fed Manufacturing Index just printed -4 against a positive 17.8 estimate. I have been on this complacency call for 3 weeks. The evidence keeps stacking. And VIX says, go to the beach.
The options market is not agreeing with VIX. Something's definitely off when you look at the positioning.
So the options market is pricing fear, while VIX says relax. How does that happen at the same time?
Dealer positioning between expiration cycles. When dealers are positioned a certain way, they suppress realized volatility. The fear is there. It is just not showing up in the headline number.
I have been saying complacency for 3 weeks. Today, we brought the receipts.
One more piece of this. IM is up almost 1% this morning. Small caps rallying into recession warnings.
Why are small caps running? That makes no sense on the surface.
Rate cut pricing. Small caps are the most rate-sensitive index we have. They are not rallying on optimism right now. The market is betting the economic damage gets bad enough that it forces the Fed's hand. That is a trade, not a belief.
So even the small caps rally is a recession signal if you read it right.
If you read it right, that is exactly what it is.
Let's talk about what is happening in the Strait of Hormuz. What did you see this morning?
A Japanese tanker made it through the Strait of Hormuz this morning. First ship in over 80 days.
You would think that is relief. Tanker through, pressure off, oil drops.
Trump rejected the toll framework the same morning. One ship got through and the door slammed behind it. Oil at $99 confirms the market read it the same way. This was a test, not relief.
Day 83 of the Iran conflict. No deal, no resolution. Energy desks are using the word recession in the same sentence as 2008. That is not a casual comparison.
There is a detail from Walmart that tells the consumer story clearly. Their chief financial officer said people are filling their gas tanks at 2022 levels.
That is panic buying at the pump. Mortgages at 6.6%, gas tanks being topped off in a panic. The consumer is getting squeezed from both ends.
Richmond Fed's Barkin used the phrase inflation anchor this week. The Fed is watching whether inflation expectations start to come unmoored. That framing from a sitting Fed official matters.
And the data is painting two very different pictures right now.
Philly Fed manufacturing came in at -4. The estimate was positive 17.8. That is not a miss. That is a complete collapse of the consensus view. But Kansas City manufacturing came in fine. Two Americas in one data release. The defense and war economy is hot. The civilian economy is cracking.
If you make something the military needs right now, business is great. If you sell to regular people, your customers are scared.
Frontline, ticker FRO, reports pre-market today. That is a tanker company reporting earnings on the same day the first tanker exits the Strait of Hormuz in 80 days. If Frontline beats on tanker rates, the shipping premium we have tracked since April is confirmed real.
Booz Allen Hamilton, ticker BAH, also reports today. Defense consultant during an active conflict. Those two together are the cleanest read on who is actually making money in this economy right now. And watch BJ's wholesale today. If their guidance warns on fuel costs, that is BJ's and Walmart, both flagging consumer fuel stress in 24 hours. Okay, pivot. While we were locked into NVDA coverage for session 50, quantum went completely parabolic Thursday afternoon. We missed it live. We are covering it now. The Trump administration dropped $1 billion on IBM quantum computing, $375 million on Global Foundries, ticker GFS, $38 million on DIRAC. Rigetti Computing, ticker RGTI, popped 30%. GFS hit all-time highs, up 147% from its low. Shout out to Mike Jones for catching this before us. Government money is structural, not hype money. This is a funded catalyst. That is a different trade than meme stock energy.
I will push back on the framing a little. Government contracts do not equal commercial viability. IBM's quantum computers cannot beat classical computing for any commercial workload yet. RGT. I was up 30% on a funding announcement, not a product announcement. That is announcement energy. Know what you are buying.
That is exactly the trade, though. You are not buying the technology. You are buying the wave of funding announcements before the sector gets priced in.
Fair. You are trading announcement velocity, not fundamentals. Just know which one you own.
So, what is your counterplay here?
Deep Fission Nuclear just filed for a $150 million IPO. They're betting on small underground nuclear reactors to cut power costs dramatically.
Why does nuclear beat quantum in your mind?
Sequencing. Artificial intelligence data centers need power before they need quantum processors. If the artificial intelligence infrastructure build-out is real, the bottleneck right now is not compute. It is electricity. Nuclear is structural. Quantum is speculative. You get to nuclear first if you are playing the artificial intelligence trade correctly.
Power before processors. I can work with that thesis. Quick one on ARM, because it got buried in all the NVIDIA noise. ARM was the real winner out of this earnings cycle. $40 million in net call premium in a single session. Breaking out, approaching the $218 Fibonacci level. Price discovery mode.
NVIDIA sold off 2%. SoftBank was already priced in at the 659 coverage level. The money moved to ARM.
Last week you said the everything AI flies phase ended when ARM sold off on a beat. 1 week later, it rips. Which is it?
Two possibilities. Either I was wrong, or ARM is getting re-rated, not as an intellectual property royalty company, but as artificial intelligence infrastructure. That is a different story and a different multiple. I am still watching which narrative wins.
OpenAI could file its confidential IPO paperwork as early as today. But the public offering is still months away, likely sometime in the fall. If it does, ARM goes higher. We talked about the SpaceX domino last session. OpenAI is the next one.
Two massive IPOs in June means capital gets pulled somewhere. Watch for that filing. If it drops over the weekend, the Monday open on ARM will be loud.
System check. My system caught AMD and Broadcom on the hardware rotation this week. Mostly in cash. Small gains, nothing wild.
Cycle improved $5,000 overnight. Solar Edge, ticker SEDG, and Enphase, ticker ENPH, hit all three exit tiers. Solar names are running. Intel, ticker INTC, and Micron, ticker MU, are still my biggest wounds. 13 positions, 7 new signals today. System is working. Book is still red.
Solar catching a bid, while oil sits at 99. Make sense? Before we get to next week, I need to say something. A company that makes software fired 3,000 people this week. 17% of their entire workforce. Not the sales team. The people who build the software. Gone on a Friday.
Artificial intelligence displacement is not theoretical anymore. 3,000 people walked out the door.
Let that land for a second. Okay, TV. Take us through next week. You did the work here.
Wednesday, May 27th is the day. 4 names report: Salesforce, ticker CRM. Marvell Technology, ticker MRVL. Synopsys. Snowflake. Marvell is the one I care about most. By a lot.
Why Marvel above the others?
Marvell makes custom silicon for the hyperscalers. Amazon, Google, Microsoft. No China export drama, no tariff headline risk. This is pure United States artificial intelligence compute demand. Clean signal. Marvell beats and guides up. The artificial intelligence infrastructure trade has legs past NVDA's ceiling. Marvel misses. The CapEx story cracks. That is the binary.
The entire artificial intelligence infrastructure trade gets adjudicated on one Wednesday earnings call.
The market has been pricing artificial intelligence CapEx as effectively unlimited. Marvel tells us whether the people actually buying the chips agree.
Thursday, you have got Dell, ticker DELL, NVIDIA's downstream artificial intelligence server customer, Costco as your consumer health check, and MongoDB.
Dell and Marvel on Wednesday and Thursday are a two-sided view of the same question. Artificial intelligence enterprise spending, same question, different part of the supply chain.
All right, here is what we are watching next week. VIX at 16.77, while Goldman is at 25% recession odds. That gap does not stay open forever. Marvel on Wednesday beats and guides up, the artificial intelligence trade has legs, misses, and the CapEx story cracks. That is your signal for the whole week. Dell Thursday as the downstream confirmation. Oil at 99. Watch whether it breaks into new territory. Hormuz tanker count over the weekend. And keep an eye out for the OpenAI IPO filing. If it drops before Monday, the open on ARM is going to be loud.
Two things to watch on levels. IM Monday morning. If rate cut pricing is the real story, it holds. If it fades, the thesis shifts. And before Marvel reports Wednesday, watch what the options market prices in as the expected move. The implied volatility on Marvel tells you what smart money is actually thinking.
Happy Friday, trading family. Go outside. Touch grass. And if you absolutely have to check something this weekend, check how many ships made it through Hormuz. That number tells you more about next week than anything else on your screen right now. See you Monday.